Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. We will be starting off with the S&P 500 E-mini futures market. Last week we saw this market made a definite push past this long talked about former all-time high that the market made back in January before it pulled back very sharply away from it. The week prior to last one, we saw the market actually make a new all-time high for this market, which is a good accomplishment. Long been in the works. Of course, this uptrend has been strong for a while, especially in the more recent past. We've seen some strong movement from the buyers on this market as the market basically pushed past this all-time high over here. Last week, we of course saw another all-time high that the market made, and of course a more definitive and a more authoritative push past all this resistance here created by the all-time high the market made around the 2860-ish area back in January. Interestingly though, we did not see the market pull back either as an initial attempt or a more rounded attempt to use this form of resistance over here as support. We do not rule that possibility out for this week. We do believe that, especially on Friday, when the market sort of just pushed a little bit down over here and closed sort of at the 2900 price level here, it may actually prime the market up for a potential move down back to the 2860 area, which we believe should now turn into support. Obviously, a lot of former strong resistance here should potentially turn into support and allow for buyers a fresh and a lower discounted entry price to take this market further up. Our long-term view still stays consistent for this market, and that is we believe that this market should, in the coming weeks or months, be primed to hit the 3,000 big round number, and that continues to be in contention here, just looking at the strong momentum from the buyers that we're seeing here. So not only the push that we've seen here past the 2860, just the overall trend at large has just been very, very confident and strong. We're continuously seeing higher highs from this market as well as higher lows. We're also seeing all of these wicks towards the downside on these candlesticks, which tells us that any attempt from the sellers to try to take prices down for this market has really just been turned against them, and the buyers just continue to be strong for this market. So just going forward, we expect that momentum to continue. However, like we said, we will not rule out the possibility of a quick pullback down to the 2860 area before the market continues its way back up. Okay, so the next market we're going to be looking at here is the light crude oil futures market. This is another market that was very bullish last week, of course, continuing on with the momentum that this market was able to amass the week prior. If you recall our analysis for this market the prior week, we had talked about the importance of this rather thickish support and resistance area on the $1.66 price level right around here. We had talked about, of course, all this ample indications of either support or resistance off of the level. And even though the market seemed to have broken out of this rising support trend line over here, defined of course by this day's bearish activity over here, and this candlestick sort of closing down strong underneath the rising support trend line. However, we had identified that the market didn't really seem to have broken underneath this former support over here, of course, which sort of lines up with this longer term thickish support and resistance area on the $1.66 price level. And we had identified that unless price made a move underneath this level, pull back, probably use it as a resistance before continuing down south, would we be confident that this uptrend was trying to either enter into an extended pullback phase or possibly a complete reversal. Of course, we never saw any of that happen at all. The market did bounce off of this support level over here. Once again, no surprises. And this buy side momentum here just continues to be strong. We saw the market not only just bounce off the support and resistance level, but also sort of close back above the rising support trend line, so as to make all this movement underneath the trend line as really a false move and possibly a trap for sellers. The market on Friday actually closed pretty much at the $1.70 price level, and if you really just remove all of this illustrations off the chart and look at this chart sort of in a more holistic view, we can see that this market actually has sort of entered into a sideways swinging pattern Of course, the ceiling here marked by this high over here, just underneath the $1.76 price level, and all of this support down here. And then, of course, we have all these intermediate levels here, including the $1.70 price level, and of course the $1.66 price level, and this entire thickish support and resistance area, all of which seems to be holding price up here really well and not allowing it to trend either ways for an extended period of time. So as of Friday, the market sort of closed at the $1.70 price level as we identified, and that really just sort of leaves the first few sessions this week as very interesting. So if the market really just continues to hold as resistance at the $1.70 level, we could see the market sort of making a second attempt, or rather a third attempt, to break the $1.64 price level over here and all of the support. On the other hand, the $1.70 level does not really hold as resistance, and this upward momentum that we're seeing from the buyers over the last couple of weeks just sustains itself. We could possibly see the market continuing its way up. Maybe we could see a pullback to the $1.70 level and the market holds a support, and we could just continue to see this market climb possibly all the way up to the $1.74 and the $1.75 price levels. If you recall our analysis for this market over the past few weeks, we've been talking about the importance of the $1.75 price level and price levels beyond that, beyond the $1.75 price level itself. And the reason for that is that if we zoom this chart out, you can see that the $1.75 and the $1.76 and the $1.78 levels really just line up very well with really long-term support and resistance levels, and that possibly explains why the market bounced off the $1.75 price level over here in the first place, and now we're seeing all this consolidation come into place. So you can see we had these really important, significant long-term swing lows coming off of the $1.75, $76, all the way up to $1.80 price level. And these are the price levels that all this uptrend and all this momentum here from the buyers was really trying to take on. Of course, not surprisingly at all, the market did actually bounce off the $1.75 price level, and now we're seeing extended period of consolidation and sideways movement as the market tries to possibly gear up to test the $1.75 price level once again, and all the levels beyond the $1.75 price level that we talked about as being important for this market from a long-term perspective. Going forward, we just continue to expect this market to be sideways for the most part, unless we see a definite push past the $1.75 price level over here, or we see the market sort of break underneath this entire thickish support and resistance area on the $1.66 and the $1.64 price level, which lines up right around here. Unless we see the market sort of break either of these two levels, so we see an extended push up, or we see the market sort of definitely breaking underneath the 64 level, using it as resistance, and then popping down once again. We're really just seeing all the sideways momentum continuing for this market going forward. Okay, so the next market we're going to be looking at here is the Euro currency futures market. This is a market that pretty much spent the first half of last week as dominated by the buyers, and pretty much the last couple of days really belonged to the sellers, and we had the market roughly close where it opened at the start of Monday. So we had a neutral week of trading if you look at the week at large. Interestingly though, right where the market closed on Friday, it pretty much lines up with the 1.16 major round number and support and resistance level for this market. You can see we had multiple instances where price in the more recent past has primarily held as support at this level. On this occasion though, with the market we saw was able to move underneath the 1.16 level, although that move really wasn't sustained. The market pretty much hit the 1.14 level right around here. And if you look at the more bigger picture, the 1.14 of course lines up with former support and resistance here towards the left of the chart, and so naturally expecting a bounce off this level wasn't really ruled out at any moment. So the bounce right off of the 1.14 pretty much took us all the way back to 1.16. We had only minor resistance come in where we pretty much had 1 day of bearish trading activity before the buyers really were able to regain control. The last week, of course, we saw more buying come in the market, as we said, for the first few trading days or sessions. And then the market, for the last couple of days, basically pulled back to the 1.16 level, where the market closed for the week. So this sort of makes the first few trading sessions again very interesting for this week, because it'll be interesting to note whether the market continues its way down. All this bearish momentum just once again takes price towards the downside, and we see the market possibly pull back, hold as resistance, and continue its way down, possibly to test a 1.14 level more recently for the second time, basically. Or whether we'll see the market pretty much hold at the 1.16 level as support, like this level has been holding as support for the more recent past, and allow price to just continue its way higher and possibly hit all of these candlestick highs over here at 1.17 level and price levels higher than that. So given the fact that the market pretty much closed at the 1.16 level, it's not very telling for us whether or which of the two circumstances do we see play out for this market. We're pretty much open to both scenarios, and like we said, a lot will depend on how the market pretty much unfolds in the first couple of trading sessions, whether we see the 1.16 hold as support or revert back to possibly holding as resistance and allowing price to, like we said, continue its way down, or possibly just rebound or allow the market to rebound off the 1.16 level again. Okay, so next up we look at the gold commodity futures market. Now this is a market that really didn't move much last week, at least in terms of vertical price movement either up or down, and a major reason for that in our eyes is really the fact that we see this market pretty much stuck between two very, very important horizontal support and resistance levels and round numbers. So essentially what we're looking at here is the 1200 major round number that runs right around here. Of course, we've had instances in the past where price either found support or resistance off of this level. In fact, in the more recent past, we did see price sort of find resistance at this level. Once price basically dropped underneath this level, we had a pullback again to the 1200 level. We did hold as resistance, although it wasn't really major or not strong enough to allow for the market to continue with this all this downward pressure over here. We actually saw the market move right back above the 1200 level. So we have the 1200 round number here acting as a very formidable source of either support or resistance for the market. And up top we have the 1220 area right around here. Once again, in the past, we've had instances where price either found support or resistance off of it. In fact, in the more recent past, we had a minor period of consolidation right off the 1220 area before price made its move down. So last week, again, price pretty much tested the 1220 area, held as resistance, and now it pretty much is contained within this very, very tight zone of between 1200 and the 1220 level, and we see that continuing unless, of course, price makes a definite move past either of these two levels. Something encouraging for us is simply the range between these two levels is so tight that we don't expect for this to continue for much longer, and hopefully in the coming week or weeks we'll see the market either make its move past the 1220 level or break out underneath the 1200 level, possibly to test this swing low over here once again, so as to continue with the downward pressure. Overall, we're still looking at this market as dominated by sellers at large, and we see this downtrend here continuing if the 1220 level continues to hold as resistance. If, however, the market moves strongly above the 1220 level and possibly uses that as support to continue its way up, we might then have a shift in bias, and we might then start favoring the market to at least test this area of horizontal support and resistance level next, which is right around the 1240 area. But for now, we still think that until the 1220 level continues to hold as resistance, we just see more downside for this market. And so in the coming week, if this sell side momentum just continues to build further on, we could see the market probably dropping underneath the 1200 level once again and continuing its way down. Although we're still not ruling out the fact that until the market actually breaks past either 1200 or 1220, we could see some more sideways trading activity or more indecision come into the market.